All right, let's jump right in. We're going to talk about building a trading strategy that's a whole lot smarter, one that helps you look right past the simple signals on your screen and see what's really going on in the market.
So, let's start with something we've all done, right? The endless search for that one holy grail indicator. You know the one I'm talking about, the one that's supposed to print money, give you consistent wins, and just make everything easy. We've all gone down that rabbit hole.
But, here's the tough pill to swallow. Most of those indicators, they look amazing on paper, but when you actually try to use them, they just fall flat. It leads to all these frustrating losses, and that feeling like, what am I missing?
And yeah, this quote pretty much says it all, doesn't it? It perfectly captures that raw feeling of frustration. You put in the time, you do the research, you find something that looks like a winner, and then you realize in the real world, it's just garbage.
Okay, so forget the hunt for a magic bullet. Let's do something way better. We're going to build a solid foundation from the ground up, and then we're going to add a really crucial second layer to it.
So the first piece of our puzzle is this thing called the EMA trend meter. You can find it right on TradingView. Now, the most important part here is to immediately jump into the settings. We need to tweak it so it stops freaking out over every tiny little price jump, giving us a much cleaner read on the real trend.
And here are the exact changes we're going to make. See how we're bumping up all these numbers? What we're basically doing is telling the indicator, hey, calm down. Ignore the small, distracting market noise and only alert us when something real seems to be happening.
Okay, so we've made it better, but there's still this one big, nagging problem. When the market is clearly trending up or down, this thing is great. But when the market is just chopping around sideways, going nowhere, it still gives us a ton of false signals.
So how do we fix that? Well, we bring in a partner. We're going to add a second indicator, but this one has a totally different job. It's not here to tell us the trend. It's here to act as our bouncer, our filter. It's going to confirm whether there's any real oomph, any momentum behind a move, so we don't get faked out in those choppy markets.
And that second indicator is the Stochastic Momentum Index. The setup is super easy. Just pop it on your chart, and personally, I like to change that main line to white so it really stands out. This is going to be our go-to tool to see if the market actually means business or if it's just spinning its wheels.
So here's how the 1-2 punch works. Let's say for a long trade. First, our trend meter gives us the green light. All three lines are green, trend is up, awesome. But we don't jump in yet. We look down at our stochastic, and we wait for that white line to dip down and then cross back up. That's our confirmation that momentum is actually kicking in.
So now we've got a solid, two-part rules-based strategy. It should work, right? But this brings up the most important question of all. What happens when even a good strategy, like this, just fails? Why do you sometimes get the absolute perfect signal? You take the trade, and you still get stopped out immediately.
And this is where we peel back another layer of the onion. This is where we go beyond just looking at indicators on a screen and uncover the hidden force that can wreck the plans of even the sharpest retail traders.
And here's the simple, kind of terrifying answer. Because the price action you're looking at isn't always real. Sometimes what you see on the chart is a story, a fiction that's been carefully created by the big fish in the pond, the institutions.
I mean, just listen to this. This is an absolutely mind-blowing quote from an old interview with Jim Cramer, back when he ran a hedge fund. He just comes right out and says it. They would intentionally create fake price action to trick retail traders, get them to sell their positions, and then scoop them up. It's a peek behind the curtain, and it is wild.
So, if price can be faked, what can't be? Is there anything we can look at that tells the real story? Yes. There is one thing that is much, much harder to fake: volume.
I love this analogy. Think of it like this. Price is the result of the election. It tells you who won. But volume is the number of voters. It tells you how many people showed up. A huge price move on tiny volume, that's like winning an election where only 10 people voted. It's not very convincing, is it? But a huge move on massive volume, now that's a landslide. That's real conviction.
And before we go any further, we have to bust a huge myth. So many traders think green volume means buying and red volume means selling. That is 100% false. The color of the volume bar just copies the color of the price candle. That's it. The only thing we care about is the height of the bar, the size, not the color.
So once we focus on size, volume starts telling us these incredible stories. First, a big price move on high volume, that's a healthy trend.
The market agrees. But a tiny little price move on huge volume? Whoa, that's a massive red flag. That's called absorption, and it's like an invisible wall is stopping the price from moving. A reversal is probably coming. And finally, a big candle on low volume? That move is weak, it's fragile, it's running on fumes and could fall over at any second.
All right, so now we're going to put everything together. We're going to combine our trend check, our momentum check, and our new understanding of volume into one complete, powerful checklist to keep us safe.
This is it. This is the trader's triple check. Before you even think about placing a trade, you ask these 3 questions. Number 1, is the trend with me? Number 2, is momentum confirming that trend? And the final, all-important question, is there real conviction, real volume behind this move, or does it feel like a trap?
And that really is the final thought to leave you with. When you add that third layer of volume analysis, you start seeing the market in a completely new light. You're no longer just a passenger, reacting to what the price does. You start to question the story behind the price, and you begin to see the difference between a genuine move and one that was designed just to catch you on the wrong side of the trade.